Hey folks, good day on the markets for us. I don't have time. I had 3 meetings today and a bunch of closings. Thank you guys for the closings. I truly appreciate you guys allow me to do what I do. Mortgage-backed securities, fantastic day. I'll have a rate update first thing in the morning because actually we repriced our rates just about an hour ago and they haven't been posted yet. So I want to give you the most clean numbers that I can. So first thing tomorrow I would be posting by 10 o'clock a.m. to let you know where rates are. But the good news is MBSs are on a nice rally. You're going to see in the charts here that we're above where we were when rates basically hit almost an all-time low just about a month or two ago. But a lot of lenders are not dropping rates. We've dropped in the last 2 days about 0.125 from where we were, and but the MBS market is up about 70. So it doesn't really make sense. But I think all the lenders as well as us think this is kind of an anomaly. As soon as the presidential piece gets worked out, you're going to have a kind of reversal back to the normal numbers that where we were. So let me get those, for those out there that really want to know what happened in the market today, let's go and see those numbers and where we're at. Hey folks, headline news. Another nice day for mortgages, but still not an all-time low. Okay, that's what I want to kind of stress to everybody, especially when we go over the numbers that I'm going to go over. Okay, so that's the headlines today. So where are we truly in the MBS market? Okay, for those newbies in there, why do I follow the MBS market? Well, what in the heck is an MBS? MBS is mortgage-backed securities. Okay, mortgage-backed securities. This is the bond or the instrument or the investment tool vehicle that is the biggest determinant when it comes to what your mortgage rate is going to be, okay? So this number here reflects what's happening to the price of the mortgage-backed bond, okay? Bond 101, investing. The more you pay for a bond, the lower the yield, the lower the rate of return, the lower the mortgage rate, okay? That's the easiest way for me to explain it. Here's what's going on right now. We have a huge rally going on. Main reason is the presidential election or the assumption on what's going to happen. The assumption behind these numbers, and I'm not being political, I'm just telling you what the facts are, is that one candidate is going to be voted in, and it's looking that way more and more as each day progresses. And because of that, there's going to be more stimulus, and there's going to be more money thrown out there. Thus, it's going to kind of shake up the stock market, and it's going to benefit the bond market, which is right in here, okay? So that's the reason for this. Is this trend going to stay? No. I can almost be confident of that. This is too big of a rally for 2 days. The Federal Reserve stepped in months ago, and they're trying to stabilize the market, and they did a fantastic job, and we've been stabilized right through this area. We've had a breakout. Okay, I'm not saying rates are going to go, go back to where we were, but this pace is a little too quick. So we could stabilize. The one factors I'm looking at right now, I watch different multiples in this and different trends with this. So in here we have all these lines, and you can see the line here, the line up here, and the line here, and all these other lines. What these lines are, they're Fibonacci levels, what we call them in charting. This is a short-term ceiling. This is a short-term floor. This was the short-term floor, and the short-term ceiling was, or the short-term other piece was down here. We broke above that, and we stayed there for a day or two. So that thus it creates a new ceiling over here of where we can go back here. Hold on, I'm going the wrong way. And this old ceiling was created way back here, as you can see, back in, what date is this? Back in August. All right. So are we going to see us teeter back to all-time low rates? Maybe. But we're talking, very minimal reductions from where we are. You might be at 2.5, 2.75, 2.875 right now. Rates might go down another 0.1, 0.2 at the most. What I can also see is possibly a reversal back to it, back to the standard numbers. All right. what I mean by standard numbers is basically back to normalcy where we are right here. So what happens is every time we get a rally, the Fed pulls out or pulls back, they're buying to bring the market back into equilibrium. When the market starts to fail, the Fed jumps in, starts buying to create equilibrium. So the Fed basically wants us to be right in this range here, and they've done a great job at it. So that's where we're at. So short term, there is a nice little move here. Rates might have dropped about 0.1 or 0.2 from where we were. I locked most clients back in this range, so back basically where we were. I didn't lock anybody down through these areas. So if you're with us, you're probably 99% of our clients are still in a much better position than where we were just a week or two ago. So that's the charting process. I hope I didn't lose you. Let's go on to what's happening today with the markets. Also, analysts are saying that the Feds might step in and start helping with quantitative easing on longer maturity bonds and such, and I won't get into that. Not in the mortgage-backed securities market. They like where they stand right now in those areas. Okay, so that being said, news that came out today, there was a lot of, unit labor costs. Costs were down here. Here's what I really want to focus on. Jobless claims. It came in a little hotter than expected. So more people actually looking for jobs right now or needing jobs. Continuous jobless claims. Those ticked up. So that's not good for the market. Federal interest rate decision, that's pretty much not going to do anything. The federal funds rate is at 0.25. That's where it's staying. Tomorrow, we're going to have some hourly earnings reports. I don't think that's going to do anything really there. And then what happened with today with rates? Well, you can see here when I'm saying, rates might have went down 0.1, maybe 0.2 at the most over the last couple days. If you go back to my report from yesterday, this number was actually up 3 basis points. So let me explain this chart and this number. This is a newsletter that I subscribe to, and I can show you the date. And it's telling us what the trends are for these 4 products. Conventional, 30-year conventional or conforming loans, 30-year jumbos, 30-year FHA, 30-year VA. Today's conventional rate is averaging throughout the country 2.85, jumbo 305, FHA 295, and VA 2.5. This one-day delta means change. What's changed in the last day? What's changed in the last 7 days? Scrap this. This is year over year. Okay, I don't know why it's labeled this way. So since yesterday, rates went down 5 basis points. So yesterday, this number would have been 2.90. Okay, you subtract 5 basis points from the 290, gives you 285. So nothing major there. This might look like, whoa, 5 basis points, but it's fractional. We're down 2 basis points from last week. We're down 81. Now, this is a substantial number. We're down 81 basis points since last year. So if you took out a mortgage last year, bought a home last year, you might want to look at refinancing because we're coming back to the tier of you can probably get a rate at least 1% lower than where you are if you refinanced or bought a home last year. Okay, so that's how this reads. And then back to the main headlines, another nice drop in mortgage rates, but still not an all-time low. That's where we are today. I apologize. Tomorrow in the morning, I will be posting where rates are for the day. I'll do a rate comparison, and I have a couple of shorts that I'll be posting. And that's new. That's YouTube's way of kind of competing with TikTok. So I'm going to be starting to do shorts a couple times a week just to kind of hit you with some information quick and easy so you can understand some different terminology and programs that we have. So that being said, if I can be of any help to you, what I'd like to do is have you go to my website, therateupdate.com. Here it is right here. Have an 800 number. You can give us a call at 844-775-5626. My name is Dan Frio. A good way to reach me also is to email me at dfrio@preferredrate.com. Here's what I'd like you to do is if you were to email me, if you have a loan that you've taken out a year ago, or you bought a year ago, you can email me your mortgage statement. I'll review it. It'll give me your address. It'll give me your loan amount, your rate, the breakdown of your payment, and I'll come back to you and say, okay, the only one missing item that I don't know is what's your credit score. I have a sponsor of the show. It's called creditscoresandmore.com. It's plural. It's also down below in the description. Click there. If you don't know your credit score, complete step 1. Take it 3 minutes. Let me know what that score is when you email me your mortgage statement. If you're in the mortgage process right now, we probably help over 100 people a month on this piece of the puzzle. They've already applied somewhere. If you apply somewhere legally as a lender, we have to give you what's called a loan estimate. That loan estimate breaks down just these components. I'll make it simple. Your loan amount, your rate, your fees, and the value of your home. With that, I will write if you send me your loan estimate, I'm going to write all over it and tell you what I can do. It'll be your second opinion. Or if you're having surgery, you always want a second opinion. So I'm going to write through that and say, okay, here's what I can do. I can honestly say 90 to 95% of the time we are winning. We're giving you either a lower rate with the same fees, lower fees at the same rate, or all the above. It's not uncommon for you to get 2.99 with $5,000 in fees. I come back at 2.75 with $895 in fees. So it'll take you 2 minutes to email me your loan estimate. I'll review it, get back with you, and just say, here's what I can do. If you want to move forward, awesome. Go to the website or click down below in my email. You can start the process immediately. As soon as I get your application online, I'll lock you in, send you lock confirmation, and we'll get the paperwork starting. Every once in a while, I don't beat it. So I'll respond saying, God bless you. Fantastic program you got. You did a great job. Sign it, move forward, close, and don't look back. So that's what I highly advise people to do. Send me either your mortgage statement, your loan estimate, or a fee breakdown of where what your current lender is offering you. At least give it a second opinion. It might save you thousands and thousands and thousands of dollars, and it's only going to take 2 minutes of your time to do so. So hopefully you'll find this informative. If you do, please don't forget to give me a thumbs up, subscribe down below, hit the bell so every time I do post a video, you get an alert. If it's a video you want to see, watch it. If not, pass on it. That's it for now. Tomorrow, like I said, I'll put out our new rates for the week, or for tomorrow. I'll do the rate comparison, and I'm going to have a couple shorts that I post going over streamlined programs, how to refinance, and how to buy your first home. God bless. Take care. See you tomorrow. Be safe.